Now let's take a look at the bigger picture. David Stryzewski's with us, CEO, Sound Planning Group. Thank you for being here. I was just noting the market turnaround, and so you're seeing a lot of green. We hit some highs recently. I think we're up to 18 S&P highs, give or take. Your thoughts on this market?
Well, it's pretty amazing that we're at all-time highs pretty much across the board. And if we even look at Japan right now, that has been 34 years since they've gotten their all-time high. And so this is a very important moment for us to be paying attention. And I would just encourage people to, be understanding that what goes up ultimately has some pullbacks and does come down. How significant, when does that occur? Those are things that we can ultimately discuss. But this is certainly a market that is rallying right now. And there's a lot of exciting news here around Nvidia, which has certainly been one of the big movers here that has made these markets the way that they are.
Yeah, I mean, there's no doubt that the AI craze and tech has sort of led the way and then pulled back, and then we started to see a reversal, or at least a broadening out, I should say, right, where we started to see other sectors gaining. Your thoughts on the Fed? I do want to talk about some specific names, but I do want your thought on the Fed, because we'll hear from the Fed tomorrow afternoon.
Yeah, so as far as the Fed's concerned, the last time that they met in December, they were ultimately looking at a pivot. And so if we were looking at a pivot, what has changed now to then? They were looking at 6 Fed drops. Now we're looking at maybe 0, possibly as high as 2 or 3. That's a big difference. I don't think that with this higher CPI, unemployment is as strong as it is right now, that the Fed is going to be able to raise or reduce rates in the way that they want to. In fact, I think that they're very conscientious of the Volcker mistake. And I think that they definitely do not want to make that mistake cut too early. So I think that ultimately this is a time where inflation is influencing Fed policy, not Fed policy influencing inflation. And I think we will see over the next quarter or two how that ultimately plays out.
So, I mean, there's more of a likelihood July, September that we see a cut. Do you think that might come then?
Okay. Here's the thing that the Fed's going to have to figure out. If they're not going to be politically motivated, if they don't cut in July and they do it in September, that'll be the most politically motivated cut in the world's history.
Yeah.
And so I think that they will do a quarter point prior to that. Will they do September as well and say, hey, a trend was established now and it wasn't just politically motivated? Not sure. Here's the big point, though. Will 50 basis points actually make a big enough difference in the world of interest rates, or is the lag effect going to be showing up right now, Nicole? And then we find ourselves, maybe rallying on these cuts in a way that was not as sustainable because we may not get that soft landing.
So we just covered Nvidia, which you mentioned, so I'm going to leave that one alone. But I do want to talk about Supermicro, which has been, people look at it and they say 845% in 1 year. Oh my goodness, right? And it hit this new recent high. It's since pulled back. To your point, we were saying it went into the S&P 500. Just a quick thought on a name like this.
Yeah. So I'll say it this way. Anything that's AI driven, that's going to change the world for AI, are very important ideas for us to look at. Who's ultimately going to be the best players in those particular categories? That's a little bit challenging to figure out. Now, this organization just made the S&P 500. So for index investors, which is most of the world today, saving inside of their 401ks, dollar cost averaging every pay period, they're able to now get a little piece of this when they put in an allocation. So I think that it's going to go up eventually just because of the trend and the fact that it's getting fed.
Right. And look, sometimes when stocks go into the S&P, they sort of buy on the rumor, sell on the news, and you do have those money managers that sort of mimic those indexes and have to have it exactly. But tech was a little bit out of favor today, though it's come back some. You're also talking about the Google, Apple story as well. I mean, what do you think there? Is they're actually maybe teaming up, right?
Well, as we look at AI, I think it's important to understand we need practical use cases in day-to-day life. The fact that this really powerful AI technology has the ability to do so many things is wonderful, but how is it going to apply to us? And so one of the things that's neat about Apple is, at least, I've got an Apple phone, Apple tools here. I like the fact that at least Apple is trying to do things in a more consumer-friendly way. They're trying to do things that are going to give us some protections. And so that's obviously one of the concerns of AI. So when Apple's talking about integration with different players, it encourages me a little bit, because you want to be able to speed up productivity. We're going to need that on the supply side if we're going to be able to really grow through this time frame here. And so this is just one step in the right direction. I think that we're looking for more players to help us with that integration conversation.
And you also have oil on the mind, you know, as we saw it cross 80 and now it's at 83.51. I mean, these are the highs of the year.
Yeah.
Your thoughts?
Yeah, well, we were up, I think yesterday, 17% since December. And so we're trending in the right direction on oil.
Yeah.
I don't see how oil's really going to be dropping at this point in time, especially given the fact that they can be profitable on the per barrel price at a rate that's much lower than this. But as we look at where the world is headed right now, EVs are not as popular as they once were. You know, it almost would seem like a growth story, you know, that the economy is doing so well that oil's up. It's actually really an inflation story. Because of the Houthis and everything that's going on. We're having to drive all the way around Africa now. That's 3,000 additional nautical miles. That's an inflationary moment. If we understand how oil is playing out here, you know, Warren Buffett thinks that it's one of the better players. It's number 5 and number 6 in his Berkshire holdings right now.
And Oxy is one of the names that you like, right?
Yeah, Oxy and Chevron. Those are, you know, as far as the dividend pays, purchases on stock buybacks, but also just their ability in this time frame to, you know, when everyone is slowing down production, they're actually boosting up production. They've got a strategic acquisition that they're making right now. It's going to open up new markets for them, and I think that we're priced in here for a successful run.
We're looking at Occidental Petroleum. It's sort of a choppy chart, right? I mean, there was a lot of excitement surrounding this name, then it pulled back, but you see it's still running back up. Right now it's around $63. It's up 1% today. When you like these stocks, do you think they have X% potential, like 10% potential, or what?
You know, I think that we're going to be seeing oil above 100. Here's the thing that I would just note is that the United States is able to get oil safer and cleaner than anyone else in the world. Not cheaper, but safer and cleaner. So we happen to be the #1 oil producer in the world by far right now.
Yeah.
We just had a record here in the United States. But, you know, just understand that we do have some rivals here in the BRICS nations with the Saudi Arabia and Russia, and ultimately they are suppressing some of their production. So that lower supply is going to mean a higher demand inside of the market here. And so we think that there's at least a 6-month run in front of this, but it could be, you know, at least a decade, depending on how the EV story goes and where the world's headed.
Yeah, Diamondback Energy as well. Just going into the same theme, right? I mean, those are 3 energy names that you like. Thank you so much for being with us. I mean, with the S&P at 5166, do you have an idea or focus for between now and the end of the year? Higher, lower? Do you put numbers down?
Okay, so here's my answer to that question, Nicole. I believe that things are going to be pulling back. I think that it would be very interesting to figure out how do we continue to rally from this point forward. So I think things are cooling off. I think that we're going to be at a lower point than we are right now, year end on the S&P, which is why some alternatives are going to be a more effective solution.
All right, David Stryzewski, CEO, Sound Planning Group. Thank you so much for being with us.
Appreciate you. Thank you.